Hey guys, have you wondered what's going on with the Huntsville real estate market? Well, I'm here to tell you. What's up guys, my name is Brandon Taylor. I used to be an engineer, now I'm a realtor in the Huntsville market. I love diving into metrics and numbers and figuring out all the details about what's going on with the value of your home. So today I'm looking back at October to see what's happened and how that fits in our trends and what we can maybe expect going into November and December. I wrote a blog post, check it out at the link down below so you can look at the numbers and play with them a little bit yourself as well. That I'm just going to go through, so we're going to do a little screen recording and as I go through what I see. So when we're looking at supply and demand, that's what we look at for telling what's going on with the market. So we're going to analyze what happened with supply, what happened with demand, and anything that may be changing in the coming months, and how those changed both year over year and month over month. So the bottom line up front is that we are in a very strong seller's market, and that market is constrained by the amount of supply we have on the market. So we have seen a seasonal slowdown this month. It's consistent with past months, past years, this time of year, but it is a little bit later in the year we're seeing the slowdown than in the past. Let's dive in. All right, so first up, the first chart we're looking at is this one right here. It shows over the past 3.5 years, almost 4 years of data about how many homes are on the market at any given time. It doesn't take a rocket scientist to figure out that we are low on inventory. There are not many houses for sale. We now have 755 homes for sale, which is the lowest. I looked it up on the University of Alabama has a research branch, and it says it's the lowest it's been on the market in 20 years. That they have records for. So since 2001 is how far their records went back. So that's pretty low. All right, so the next thing we look at is with supply is how fast is it changing, how many new homes have come on the market each month. So looking at this chart over the last 3.5 years, almost 4 years, you can see that there's definitely a seasonality to listings coming on the market, to new listings showing up, and that we are on the downside of that for this year, that it is decreasing month over month. But if you compare this October, 723, to last October, 727, we see that's flat. So there hasn't been a decrease or increase. I mean, 4 houses is lost in the noise, right? Less than a 0.5% change. So we're not upset about that. But if we look back to the October before, we're looking at 661 and 626. So it's flat year over year. But one thing I think is interesting is that the drop between September and October this year was very significant, whereas the past couple of years there's been very flat. It hasn't been much of a change. 50 houses there, 30 houses last year, and just like 9 houses the year before that. So it's been flat. Normally you think of the school year calendar decreasing demand from the summertime, but this year we didn't see that until October, which I think suggests because of some of what's going on with the pandemic and all that maybe some of that held over longer than maybe we're used to. Some of those people who were planning to buy a home over the summer maybe didn't find it because of some of those slowdowns. So new listings though, like I said, it's a 14% decrease since September, but only 0.5% since last year, which is essentially flat. All right, so what we're looking at here is a chart of new listings each day. That's what the bar graph represents. And then we have some trend lines, the 7-day moving average, 14 and 28-day moving average for each of those. And you expect the shorter ones to be a little noisier, but sometimes you can see the direction and kind of those rates of change kind of things to look at. So I think it's surprising when you look throughout August and September for most of it, how steady this 28-day moving average was. So we were at 28 kind of at the beginning of the month, kind of held that throughout most of August. And September, we didn't drop until there's kind of an inflection point around the beginning of October. And we see a steady decline throughout October down to where we are at the end of the month, which was 19 new listings per day. So, and we look at the 14 and the 7-day, and it suggests that was going to continue to decrease. There's a couple things going on that I think might have interest that. I think the election probably has something to do with it. There's just some uncertainty there. People didn't really want to sell. And then I think there's some seasonality here where we expect to be closer to that 20 a day through the winter months than we are that 30 that we started with. We have for supply is a little bit easier to look at. It's a little easier to count. So now we're going to dive into demand for a few minutes. Demand is a little bit harder. We have a proxy. It's hard to know how many buyers there could be if there was unlimited inventory, so to speak. And so, so we kind of have to look at some other proxies for measuring that. So the first thing we look at is closed sales and how many sales do we close each month. So last month there were 710 sales closed in October, which, as I note here, is a 4% increase from last year and a 13.7% decrease from last month. The monthly change for September to October there is pretty different than what we've seen in the past. Last September to October, you can see that there was actually an increase of 1.6%, and then we had a decrease in 18 and an increase in 17, but they were all smaller decreases. So this points to that same thing I was talking about, where it seems like the buying season kind of shifted about a month or 6 weeks, probably because of the pause kind of at the very beginning of the spring. The next metric I like to look at is pending sales. This gives us a little more live look because closed sales are delayed, 40 to 60 days, sometimes 90 days. And so that's not quite as live, whereas pending is a little bit more current. But the negative, every metric has a plus and a minus, or we would only use one, is that pending sales aren't actual sales, right? Some percent, 10 to 15, maybe a little higher depending on the price point of sales fall through. And so these are not sales per se, these are houses going under contract. But it gives us a good idea of demand nonetheless. And so last month there were 748 homes that went pending, which is a 3.5% decrease from last month, but an 11.8% increase from last year. So we had an increase in overall volume, as you can see where the curve is significantly higher, but it was a slowdown from September, but a pretty small slowdown. So historically, we look back the last couple of years, same thing we were just doing. This year was 3.7. Last year was 3.7% increase, a 1.7% increase in 18, and a 4.2% increase in 17. So we had a decrease this year, which is different, but we were also at a higher volume than we have been in the past. So yeah, you see there's an increase. And I think that just has to do with the weird year with schools not starting on time, and just, I think people were out of sorts. And so I think that's kind of the weirdness of 2020 continues with house buying. All right, now let's hop back over to our pending chart. Here is the daily pending sales. This is on the website, but it's easier to see if I pull it up actually in Google Docs. And you can see once again that it's been pretty steady for the last 3 months. So we're starting at about 24.9. There was a high, a little over 26. And then the low towards the end is at 22. So 22 to 26 is a pretty narrow band of how many houses per day over 28 days. And there's not a huge variation from that. If you look at the 7 and 14 day, it looks pretty steady as well. So that suggests that demand by this metric has been steady throughout the period. Now, we can't talk about how these numbers aren't identical to the numbers we were just looking at. And the reason for that is just the data. So I made this chart off of MLS data, which is an imperfect system, of course. I could have missed, especially pendings, because they are only temporarily in the state. And so there's definitely a chance that I missed some throughout the reporting period. But it gives us a good idea, and I think it's useful. So demand has been steady, and we can look from those other metrics that demand's been high, so we can say that it is still the same from this point of view. All right, another thing, and this is a proxy for demand, or something that impacts demand, is interest rates. So this is the Freddie Mac Primary Mortgage Survey. I'll hop over and look actually at their website over here. They won't let me embed this in my website, so we gotta come look at it here. So this has been pretty cool. So this is a survey that Freddie Mac has done since 1971, it says. And you can look at the whole period if you want to, and you can see how historically low our interest rates are right now, and how they've been that way for a very long time. I think recessions are in gray there. Yeah, so it indicates a recession. So if we look just at 3 years worth of data, just so we can see where we are now, we can see that we are at lows. It's obviously past the end of October, but throughout October, we were among the lows that we are in this reporting period, and among the lows that we've ever been since in the last 50 years that this has been taken. That rates are below 3% for, I guess now the ARM is above 3% sitting here on November 12th. But throughout the reporting period, it's been below 3% for 15 and 30-year mortgages, as well as the adjustable rate mortgages there. you can take a look at some of the definitions and things on this chart that are useful. Things like this is for a basically a 20% down kind of loan. It does keep track of the points and fees that are paid as well. And this this percentage rate that you see here, the 284, 234, 311, does not include any of those fees. So so that's the fees or points. So very low interest rates. We do expect that to increase demand because it keeps people's payments and the life cycle cost of a home, increases their buying power, right? And so that should increase demand when you see a lowering of interest rates. Finally, another way to look at demand is to look at the number of days on the market. It tells us kind of, is there some pent up demand waiting on the sidelines, so to speak? And as you can see, looking at the median days on market in Madison County, we've been at 3 days on the market as our median for the past several months since, was it June? So 3 days is a weekend is essentially what it takes to sell half of the houses in Madison County. That's obviously very low, and it does say that there are people just waiting to buy a house and they're waiting for the right one. So now we combine supply and demand and look at the months of supply. This is a simple ratio of how many homes are on the market at the end of the month, and then you look back that month and how many they sold, and you compare those and you get a number, which is a measure of months it would take for us to run out of inventory, and we are at 1, which is also an all-time low, which says we are in a very strong seller's market. The number where it's like 5 or 6 months you consider kind of a neutral market, and higher than that is a buyer's market, and so it's a very strong seller's market. I also like this little chart that I set up. I call it the Delta chart. It's new listings minus any pendings, and it gives us an idea over the reporting period. When we look at those new listings we had and we look at how many went pending each day, we can just take the difference of that and say, for each day, was there a net gain or a net loss in homes? And throughout the reporting period, we had a net gain until middle of October when we set it to this 28 days before that we fell into the negative area, 7 days before that we fell into the negative, and it continued that. Now both the 28-day, the 14-day, and the 7 are all ended October, that we were losing houses every day relative to on average, which is, that's what all the metrics point to, but we'll be watching for this to turn around and say, when are we starting to gain inventory again? Because traditionally you gain inventory relative to sales throughout the winter when there's fewer buyers out. The consequence of all this is you say demand has been increasing or staying high at least, and the supply is very low. You expect to see the price increase over a period of time. And what's interesting is actually the last 3 months it's been fairly steady, where the median price point has stayed right around $250,000. That's obviously a big increase from where it was a year ago, and but we do expect those pressures to increase prices, and it would be hard for that to stay down unless there is a significant increase in inventory or a decrease in demand. So what does this mean for buyers, sellers, and investors? So for buyers, well, there's a couple things going on you gotta think of. Interest rates are incredibly attractive right now, so it is a good time to buy in that if you can find a house, you can get you can lock in that fixed rate for a long period of time and get a great amount of house for your money. The downside is prices are high, and inventory is low, so it's hard to find that house, and you may pay more than you were going to pay for that house, say, a year ago. But North Alabama's economic indicators, things like job growth and things like that, point to this being a very healthy market. It doesn't point to a bubble, and so in some ways this could be the lowest these prices ever are. They may not go back there anytime soon. It probably depends more on kind of your life circumstances on whether it's a good time to buy or not. Tips for buyers right now, I think, is a great time to save up some money. In this market, buying a house with very little money down is very challenging. A lot of sellers aren't willing to do repairs and things like that, or give much in the way of closing costs. So if you have some money in your pocket where you can say, hey, you know what, if they don't fix it, I can fix it, to find the right house, that's a good idea. Also, putting healthier down payments makes you more competitive in those competitive bids. So those are good things to be thinking about. So accumulating a little bit of money, waiting a couple of months isn't the end of the world, but at the same time, you want to strike while the iron's hot, and interest rates like this don't seem like they will stick around. Although I was saying that 6 months ago too. So who knows? For sellers, what can we say? There's no inventory essentially relative to the amount of demand, so it is a great time to sell a house. There are lots of buyers. The timing probably is in your favor if you're looking to sell. I think the hard part for sellers, if you're looking to sell and buy in the same market, the advice I just gave gets it a little complicated, right? And so, so give me a call. We'll talk about it and see what works best for you and your family, and what we can do to help you out. For investors, there's actually a great deal of competition for investors because the market's been good for a steady amount of time. There are a lot of people with assets they want to invest, and our market has become more attractive to outside investors. We're seeing a lot of people from all over the country come here to buy residential real estate. And so it is a tougher time to buy, especially turnkey type rentals. But if you're willing to fix something up, buy something that needs some help, a lot of out-of-town folks, that's a little bit harder logistically to do, so there's a little bit less competition there, and you don't run into retail buyers quite as much with things needing a good bit of work. So if you're kind of in that buy, renovate, and then rent it out kind of model, you can probably find something like that. If you're in a fix and flip mode, it's a pretty good market to be doing those sorts of things in. So that is the status of the market as far as I can see it, as far as October in Huntsville. So, have any thoughts, opinions? Let me know. Anything I missed? Anything maybe that you've got that I may have not seen? I'd love to hear your comments and feedback. Thanks a lot, guys. Hope you have a good Thanksgiving, and I'll see you next month to talk about what happened in November.